In this video, I'll be providing a performance update of my InvestEngine stock and shares ISA portfolio. For those new here, I have a goal to build a 100k ISA portfolio by the end of 2027. I'm using InvestEngine as my primary platform to achieve it. This month has been another painful one. It's been volatile, there's been huge swings up and down with the market, but I'm trying to attain a long-term outlook. And I've tried not to look at my portfolio too much over the past month. It's been tempting, but this would actually be the first time in a couple of weeks of taking a look at my portfolio. Before we take a look at that, how these videos tend to work if you're new here, is that we first tend to look at what's been happening with the markets. And for this video, it's going to be a little bit different, as we're going to keep this section real quick, as who knows what's been happening with the markets by the time you watch this. Over the past couple of months, the markets tend to be very different day on day. They tend to be huge swings. So instead, I want to focus the first section more on what's going to happen for the rest of the year. What's everyone predicting? What's Wall Street predicting for the American stock market? In terms of the market performance over the past month, at the time of recording, the S&P 500 is down by 8.64% over the past month. And if we bring it closer to home, the FTSE 100 is down by 4.29% over the past month. This is bad performance, and of course, it would have a bad impact on my own portfolio. But by the time you're watching this, it may have all changed. Over the past few weeks, there's been some huge swings in individual days. So things may have changed by the time you're watching this. And instead of focusing on what's happened over the past month, let's focus on what Wall Street is expecting in terms of performance for the rest of the year. A big reason for the bad performance over recent months is around the potential economic fallout from Trump's trade war. And Wall Street banks have factored this into their new predictions. We can see all the banks here have cut their predictions from the start of the year. Wall Street's average end-of-year S&P 500 target now stands at just over 6,000. This is a huge cut from their average prediction of 6,539 at the end of last year. However, I still see these predictions as relatively good news. As to reach a target of 6,012, it means that these banks expect the S&P 500 to rise around 16% to the end of the year. And if this happened, I would be super happy, as it would be really positive for my own portfolio. Of course, these banks and their strategists are often wrong. Predictions are just predictions, and they rely on assumptions. A big assumption which will be factored into many of these predictions is that there'll be some relief on tariffs. And at the moment, who knows what Trump will do next? Nonetheless, even if the predictions are wrong, history still suggests that over the long term, markets do recover and hit new heights. And my own strategy is fully focused on the long term. I'm focused on the long-term picture, and I'm not going to change my strategy based on what's happening with the markets at the moment over the short term. It's a good job that I am focused on the long term, as when we take a look at my portfolio, it won't be looking pretty in the short term. So let's bring up my InvestEngine portfolio and take a look at what's been happening with the performance over the past month. We can see that my portfolio has a balance currently of £42,089. And over the past month, it's in the red deep. I'm down by £3,122 in pound terms and 7.07% in percentage terms. And this means it is my worst month since I started investing in this portfolio. And it follows a rather bad period for this portfolio. If we zoom out to the last 6 months, we can see that since around mid-February, this portfolio has had a downward trend. And there's been some particularly big down swings over the past month. We can see that the portfolio peaked at £44,819 at the end of March. And then there was a really big downward swing between the 2nd of April to the 4th of April. And ever since then, it's been rather volatile, but around the same mark. In terms of my deposits, my contributions over the past month, I made a deposit on the 25th of March. This was around £720, and the reason why it was this specific figure is because this was all I had left in my ISA allowance for the last ISA year. So I invested that amount to max out my allowance. And so far this tax year, I've invested £1,000, and I'll revert back to my usual 1,500 monthly payments at the end of this month. So from the 25th of every month, I'll be investing 1,500 into this portfolio. The reason for the rather weird deposit amounts over the past month is not to do with what's happening with the markets, it's to do with simply the tax year end and start dates and how that affects my ISA allowance. Coming back to this month's portfolio performance, as I mentioned before, this is the worst month since I started this portfolio. But I'm not too worried as I have a long-term outlook, a long-term strategy with this portfolio, and the markets have recovered from worse before. In fact, I'm seeing this period as a good time to invest, as I'm seeing the ETFs I buy every month at a discount. I was happy to buy these ETFs when they were at all-time highs, so I should be more happy to buy these ETFs when they're at much lower prices. So let's take a look at what's happened with the ETFs I own over the past month. We can see that the HSBC MSCI World, which is my biggest allocation at 80%, was down by 7.69% over the past month in percentage terms and £2,732 in pound terms. So not a good month, but expected given that most of this ETF is invested in the US stock market, and the US stock market went down a similar amount over the past month. It was also a bad month for the next ETF, the iShares MSCI World Small Cap. This was down by 8.09% in percentage terms and £333 in pound terms. This again is heavily exposed to the US, and I was expecting bad performance here. The bad performance from the first two ETFs is the reason why I've tried not to look at this portfolio too much over the past month. The one shining light over the past month and over the past few months has been the next ETF in the iShares Physical Gold Fund. This was up by 6.18% in percentage terms over the past month and £178 in pound terms. The reason why I invest in gold is to provide a hedge against my stock market investments. Historically, gold and stocks don't tend to move in the same direction at the same time. Historically, when the stock market does badly, gold tends to do well. And at the moment, this historical pattern is repeating. The final ETF in my portfolio is the WisdomTree Cloud Computing Fund, and this is my worst performing fund. It's down by 13.19% in percentage terms and £234 in pound terms. I'm not surprised that this is the worst performing fund, as it's the highest risk of all my funds here. And the reason why it's the highest risk is because it's the least diversified. It's only invested in a couple of hundred companies, and all those companies are in the same sector, in cloud computing. So because of this, it's exposed to big swings upwards and downwards. And over the past month, there's been a big downward swing. I'm hopeful that there'll be some big upward swings when the markets do recover. It might not happen soon, but I'm still hopeful for this fund. But I'm balancing that hope with the understanding there's a lot of risk here, and that's the reason why this only forms a very small percentage of my portfolio at 3.5%. So overall, now we've gone through all four funds, we've gone through my entire portfolio. It's not been a good month. I'm down by over 7% with this portfolio. And this is not good on paper, but it doesn't mean I'm at a loss, as I'm only at a loss when I sell, and I'm not going to sell anytime soon. I'm looking at a very long-term horizon with this portfolio. So based on my current plans, this portfolio has plenty of time to recover. I have a clear long-term plan with this portfolio where I invest £1,500 every month. And that plan won't change based on what's been happening with the markets over the past month. The markets may have gone very crazy, a bit wild and going up and down a lot, but my plan remains the same, investing £1,500 every month into a set of long-term focused ETFs. Let me know how you're feeling about the markets at the moment in the comments below. And if you want to find out more about my 2025 investing plan, then I have a video around here. For this video, thanks for watching, and if you want to follow my personal finance journey, then I'd greatly appreciate subscribe. Thanks.